as well. And then we have our schedule. After this, we have a happy hour near here, about 10 minutes away from here, and invite you guys all to join. And we'll have lots of networking time, especially in the speed match format that we'll have over there in just a moment. So with that, let's tell you a little bit about 10 Capital. For those who don't know us already, we're based out of Austin, but we work across the country. And at heart, we put together fundraise programs and campaigns. We advise on strategy, coaching. We use a lot of AI tools to analyze pitch decks, websites, LinkedIn profiles, and other tools that go into it. We also build due diligence reports as well. Find that's one of the best tools you can have for raising funding out there. And so we do a lot of work to prep companies, and then we put them into our online events and then into our in-person events like this one. So looking forward to talking to you guys about this as we go forward. This is a good picture of our team. We're continuing to grow. And again, like I say, we're based out of Austin, and we have people in other parts of the country. We've been doing this since 2009. We were originally called Texas Entrepreneurs Network. That's how we got to the name 10, and have been continuing to grow our investor network and our partner network and our fundraising program over the years. So with that, we also form capital for early stage ecosystem. With that, we help angel groups find members. We helped over a dozen angel groups find groups. And then we also work with VC funds. We help them find limited partners, mostly family offices. And finally, we also help high net worth start family offices as they invest in emerging operators. So this is something that we've been doing for quite some time, and we're continuing to grow that. We also support angel groups in other ways. We do back office work for them. We help them do marketing and mailings and so forth, and we're increasingly called in for that. So that's becoming more of us. For those who want to join our program, if you take a picture of that QR code, fill out the form, we'll follow up with you to see if this program is a good fit, or just come see me during the breaks today. We also have a chat bot called AI. It's called Ava, but it's an AI chat bot that is on the website, startupfundingespresso.com. We run an Investor Connect podcast program. We've interviewed over 850 investors, angel VC family offices, on what they invest and how they invest, and also write a Startup Funding Espresso blog post. It's a micro blog post, 150 words, about a minute and a half to read that. And I've done over 2,000 of those. And so we put all that inside the chat bot itself. So you can ask it any question, and it gives you an answer about funding and investing in startups. This is our history. Like I said, we started 2009 under Texas Entrepreneurs Network. My background is I started 3 angel networks. I started CTAN in Austin in 2006, the Baylor Angel Network in 2007, the Wilco Angel Network in 2008. Having so much fun doing angel groups, I retired from my day job and started 10 Capital in 2009. Actually, it's called Texas Entrepreneurs Network. And then by 2016, we were expanding our network and started getting calls from outside of Texas wanting access to our investor pool. So we changed the name to 10 Capital. And then later we started working with different angel groups and VC funds and family offices. So we changed the name to 10 Capital Network. And so we continue to grow. So with that, we do many different kinds of events. Like I said before, this is one of our live events that is moving into a speed match format. We want to do more introductions between startups and investors, and we'll do that here in a little bit. So we also, if you want to see all of our events, just go to 10capital.group. That's our website. There's no .com on that. Those were all taken up years ago. And click on the events button, and you'll see all the events that we have coming up. We do 4 online events a month. We do 3 or 4 custom online events, and then we do 1 in-person event every month, moving to 2 here shortly. This is our schedule that we had last year. We've been around the country: Austin, Seattle, Dallas, Bay Area, Chicago, New Mexico, etc. And as we continue to grow, this is our calendar this year, where we're going to the bigger cities, but we go to each one twice. We're trying that out to see how well that works. So we get around the country, and we find that's important because we find a lot of people coming to us because they say, I've talked to everybody in my town, Seattle, or my city, Chicago. Now what? Well, come to us and we'll put you in front of investors in other parts of the country, which gives them a fresh set of investors. This is a podcast program I talked about before, over interviews, great resource to learn about what investors are looking for in startups and how they invest. And then one more. I think that's the end of the slides.
No, it's not. So
Okay. So we also have a mentor and advisor program. We have many partners that come to us with expertise in different areas. So if you're interested in joining that, let us know, and we can also help startups find the right resource for what they're doing. So with that, we wanted to thank you to our partners and sponsors and people that are supporting us. And at this point, want to talk about some of the companies that are helping us. We have a great support from Perkins Coie. This is our 4th or 5th time we've been here in this location. They help us in other parts of the country as well, LA, Austin, and so forth. Armand will be here later this afternoon, so you'll get to talk to them about their.
Jason, and
Would
Susan.
you like to tell us?
Yeah, I kind of already did a quick intro when I walked in the door, but Perkins Coie, the top law firm with 1,100 attorneys, again, really focused on entrepreneurs and startups and that innovation for 110 years. And then you actually were the top 2 or 3 patent filers in the nation as well, a lot in the medical space. So I think that's kind of the predominant focus today. But welcome, thank you. And you'll get to meet Armand, you won't miss it, trust me.
He's apparently has landed at the airport, is on his way over here right now, so we'll talk to him in a few moments as well. So at this point, I'd like to have our partners come and talk about themselves. Armand will come and do that a little bit later. This is what he looks like, so you'll recognize him here in a little bit when he makes it in. And with that, let's have Jerry come up and, or if you want to, just tell us more about yourself.
Sure, thanks very much. I'm Jerry Levitt. I'm a CFO, real world boots on the ground, been here in the Valley for decades as a CFO. Came out of KPMG. I have a master's in tax law, and I've been serving on the operational side of finance and the strategic side of finance for a number of companies. Had some great successes. Sold a company to Cisco back in 2012, and 3 years ago sold a company to the largest public company in France. So grew those both from nothing, and the last one we grew to $1 billion. But today what I'm doing is, I like startups, I like technology, so I'm helping a lot of different startup companies, including biotech. So we're a group of 2 CFOs with real boots on the ground experience, and we also have teams underneath of us. So for our companies, we are their finance department, and we get them when they're brand new out of a box, 2 guys or gals in a room with a dog and an idea, all the way up to public companies. So we have some public companies that, outgrew us, but we're still helping, and we do everything in between. So, it's a great cost-effective way to go. So for the price of, really high-end, a senior accountant or a controller, you can get a complete finance team. Thank you very much, all.
Great, thanks. Next, we have Keith Newman. Keith, you want to come up and tell us about yourself?
Hey, guys, recovering startup executive, turned go-to-market consulting guy. I've spent a lot of my early career when I had a real job in media and then transitioned over to some tech companies. The go-to-market firm that I'm doing right now and have been doing for a couple of years is really focused on growth and scaling. So helping early stage companies, particularly in a technology orientation that really focus on product, engineering and development, help them figure out go-to-market, which is how do we acquire customers faster so that we can raise money faster and easier? Really understanding everything from branding, messaging to lead gen and partnerships. And we have a team of about a dozen people in a virtual setup all over the place. We've had a lot of great experiences with companies, getting them funding and exits, and also crashing a couple, which is a great experience learning. It's a pleasure to be here. Thanks for having me.
Great, thanks so much. And next we have a round of introductions. We'll meet some of these guys already, but those who have not talked so far, Lynn, you want to just tell us about just your name and your company?
Sure. Lynn Chipperfield, and I am the Vice President, Chief Legal Officer of Enrichly Technologies.
Great.
I'm Tino Go, CEO and founder of Baru. We sell custom cabinets, half price, half the hassle, half the time.
I'm Ryan Ford, CEO of the Shape Sensing Company. We do soon.
And Trino, of Slow or San Luis Obispo. I run Vendox. We're a matchmaker for fractional sales leaders and work with a lot of scaling companies and help them get away from founder-led sales.
Great.
Jason Schreiber, partner here, Perkins.
How about yourself? Great, thanks.
Sunil Panda, co-founder and CEO of Private Site. It's a startup, actually, we're building something for the sales team, actually, go-to-market investment, and I think it's
Susanna Gatso, I'm counsel here at Perkins. I work with Jason, and we have incredible clients that are both company side, represent companies, and we represent a lot of investors as well. And it's all talk until we come in and actually close the deal and get you the money. But we help companies from the start, like incorporating and really act like they're outside general counsel, to connect them with whatever they need if they're, hiring, firing people, employment, tax, full service, transaction documents, we're very tech centric.
I'm Ryan Sullivan, the COO of Buddi, and we are a pet-focused streaming network.
I'm Brian Clary. I'm co-founder and president of William Price Distilling.
I am Gabriela Bachega, and I work at TEN with Hall.
So let's go to kick off our pitches here, so we stay on track with our time. We're going to shift it back a little bit, but first we're going to start with Ryan DeVore. The beauty of this is we have all the slides up here ready to go, no laptops, USB sticks, or what have you. But with that, let's have Ryan come on up and kick us off and just give us a 5-minute version of the pitch.
All right. Thank you so much for having me. Thank you for hosting. Appreciate it. My name is Ryan DeVore, CEO of the Shape Sensing Company again. We are also based in Austin, Texas, and we've developed a novel technology that uses fiber optics to turn ordinary surgical tools into smart devices. So we've got a team that has been working together for 12 to 15 years, building advanced electronics and photonics systems. Our co-founders have a previous successful exit, and I come to the company with 20 years of experience in commercialization from Boston Scientific and St. Jude Medical. And we're not building a smart device. We're building a platform that's going to unlock an entire generation of smart devices. So let's talk about why we need smart devices. The doctors today are using outdated technologies to navigate surgical tools during minimally invasive procedures. They're either using X-ray, which requires radiation, only provides two-dimensional views in these grainy grayscale images. They're using point trackers that just tell the doctor where the very tip of the device is, or they're using these limited visibility cameras that only have this vision out the end and don't tell you anything that's going on behind it. Unfortunately, that paints a limited picture for these doctors, and it requires them to use a lot of guesswork in navigation. Well, guesswork leads to longer procedures. Longer procedures require more anesthesia. They have higher radiation exposure, higher costs, and higher complications. So it's not surprising that the industry is demanding better, safer, smarter procedures. And we can see that with the latest market trends, with radiation reduction technologies, more robotics for precision, more AI and automation for efficiency. Well, today, there are only two companies that provide radiation-free, full-length 3D device guidance for minimally invasive procedures. That's Philips and Intuitive. They're using a technology called fiber optic shape sensing to provide this capability. They're charging a premium. They have clinical evidence that it's working, and it's gaining an adoption. But unfortunately, these are closed ecosystems. So they don't share their IP with any other companies, not surprisingly, right? So because of that, there are only two devices in the world that have radiation-free 3D full-length device guidance. And that's one from each of these two companies. So we're going to change that. Our fiber optic shape sensing technology is going to unlock the entire rest of the industry, providing this novel guidance with any device that has one of our proprietary sensors in it. And importantly, because of the IP landscape, we're the only ones that can unlock the rest of the industry. So if any other company wants to compete with Philips and Intuitive, they have to come to us. Now, I will show you, this is a PDF, so I can't show you what it looks like here, but in our roundtables, we'll get some live views of what that looks like. So 3D guidance is great, but it's really just the beginning. The data that we use to enable 3D device guidance also enables closed loop feedback control for robotics. And beyond that, we can take that same data and create a procedural database that we can use to train future models that unlocks these next generation capabilities. Personalized care, where the system can pick out which devices are best for a particular patient. AI-assisted navigation, where the system can actually tell the doctor how to best navigate safely and efficiently. And in the long run, autonomous robotic procedures. There's actually a line of thinking that flexible, autonomous robotic procedures are not possible without shape sensing. And again, if any company wants to do this outside of intuitive, they have to come to us. So you can probably see this is just a massive market. We've identified 100 million procedures that can use our technology each year, and that's roughly a 15 billion total market. In the near term, we're targeting about a 5-year market capture of nearly $90 million, and that's by installing about 800 to 1,000 systems. Our business model is very straightforward. We partner with major medical device manufacturers. We help them integrate our tech into theirs. We sell them systems that they'll deploy out into the field. And then on an ongoing basis, we sell them sensors that are used in their procedures. So it creates a high growth recurring revenue model, kind of razor blade. Now this process is already underway. We've got 9 customers, 9 major medical manufacturers that have purchased our R&D kits and are at various stages of validation and product planning. And we've also validated the technology. We brought it into the X-ray lab with our clinical advisor. We turned off X-ray and we allowed him to navigate a guide wire with our sensor in it inside of a phantom model successfully. The technology works. So that brings us to where we are today. One of those 9 customers is at the peak of, or at the verge of signing the first commercial deal. So we're going to actually have our tech out in the market. That deal is going to sign this fall. And in the meantime, we're raising a $2 million safe. That's going to allow us to start manufacturing, but more importantly, allow us to scale the team so we can bring on more partners. More partners, of course, means higher revenue scale. So look forward to talking more at the roundtables, but thank you very much for your time.
Enrichly Technologies, we are disrupting and aggregating the member organization e-commerce system. Now, member organization, what is that? You all probably belong to one. You got Shriners, Masons, Rotary, Kiwanis, Greek organizations at universities. Only a couple of things you need to know about member organizations. Number one, the members are extraordinarily, intensely loyal to the name of their organization. Number two, they buy a lot of stuff. And number three, for years, most of these organizations have been taken advantage of by predatory vendors, not paying licensing fees. Most of these organizations have left light royalties off the table. And so what Enrichly is doing is disrupting that. This is our leadership team. You can see here the CEOs of 3 major Greek organizations, Phi Delta Theta, Alpha Gamma Delta, Katie Abernathy, that's our first women's organization. Troy Medley, who is our founder, is the CEO of Lambda Chi Alpha. These are all experienced business people. You see some gray hairs here. I assure you that our operating team's average age is 27, so they understand the system. We're starting with the Greek world because that's what we understand. That's our competitive mode. The leaders of these organizations, think of it as a lot of contractors getting together and forming Home Depot because they were tired of being ripped off by their suppliers. It's the same sort of system here. How do we work? We have set up a white labeled shopping center on the website of the national organization where members can go and purchase products. This is white labeled, so the investment's already been made. When we sign up a new client, all we need to do is change the logo, change the colors, have graphic images of the products, and they're all good to go. Very inexpensive, and we can leverage on that. In addition to the storefront business, we have representatives who go out to the local universities and talk to the chapters. A lot of the purchasing goes on at the chapter level. You know, believe it or not, 175,000 new men and women join Greek organizations every year, and they only stay there for 4 years. So there's this 4-year cycle, but there's also a cycle in recruitment, homecoming, parents' weekend, formal, and they all buy stuff for that. So we've got people who do bulk sales at the local level. We've got storefront sales at the national level. So how do we make money? We source products from licensed vendors that vendor has to pay the royalty. The royalty is based on the wholesale price. The organization gets about 10.5% of the wholesale price, and then we mark that product up and sell it, and we get the margin. We're searching for about a 75% markup, which gives about a 43% gross margin. There's less margin on local sales of t-shirts, bulk sales, more margin on sales of jewelry, sweatshirts, that sort of thing. But we keep that markup, and we're trying to keep it at around 43%. We have significant leverage on the SG&A line because we've already made the investment in the white label website, so we don't have to do that anymore. Our growth story is important. We've already signed to 10-year agreements 3 of the largest men's organizations. In June, Alpha Gamma Delta, our first women's organization, joined us. Pretty soon after that, we received an inquiry from the United States JCs, the Junior Chamber of Commerce. This is proof that our system works in the non-Greek world as well. As a matter of fact, the JCs have introduced us now to the international JCs, which has chapters in 50 countries around the world. We're not ready to swallow that yet, but that it's proof that this system works, not just in the $400 million Greek world, but in the $13 billion market of non-Greek, which is why we're here. We have that really good startup problem of outgrowing our money. We've got more organizations lined up at the door than we can service, and we need to hire personnel to service these client service personnel, because this is a high-touch business. They know what they want. They know that they don't want you to mess around with their logos and their name. So we need to raise some money to hire the people to service all of these clients we've got waiting for us. We project some good growth. Like I said, we've got tremendous leverage. The investment's already been made. We think that we can be about a $40 million company in about 5 years with a discounted cash flow value of about 100 million. That shouldn't be hard, because with each organization, we get higher leverage. A couple of things I want to leave you with. Number one, this is a simple business. We haven't invented a product. We're not trying to invent a market. All we're doing is taking advantage of the loyalty that these folks already have to their brands, and we're aggregating it together and giving them a place to buy it. The other thing is, we're not trying to build an Enrichly brand here. We're leveraging on the brands that already exist. We don't care whether they know, frankly, whether we exist at all. And finally, the total available market is about 13.6 billion if you include everybody, Masons, Rotary, that sort of thing. We have a strong exit strategy. Companies that have been in the e-commerce sector and universities and big organizations in the past, we can talk about that a little bit further as we get together, and that's all I got.
All right. Thank you. Next up is Brian Clary of William Price. There you go, sir.
Hello, everyone. My name is Brian Clary. I'm the co-founder and president of William Price Distilling, and we're located in Houston, Texas. So we are here to disrupt the coffee liqueur segment. Right now, we're looking to craft the future of coffee cocktails. Our biggest award that we've won so far is a gold medal at the San Francisco World Spirits Award. That puts us in the upper echelon of products. The vision is to create a lifestyle brand and a new standard for coffee liqueur. A lifestyle brand. Who here drinks coffee? Who here has a relationship with coffee? They have a place they go, a way they drink coffee, how they take it at home. That's the kind of thing we want to adopt into our product and connect with a person at that level. So the coffee market is coffee is the world's 3rd most strength beverage, next to water and tea. You can't really make alcohol out of water and tea, but coffee you can. In the alcohol space, there is some headwinds right now. However, we have found that the coffee liqueur market is still growing at a 3.5% year-over-year growth. And that's mainly due to the adoption of the espresso martini and the fact that the only major market player in this segment is Coie. They do have a 75% market share, which allows the other 25% is very wide open for us to play. There is a total addressable market of 4.2 billion. That is just the coffee liqueur market and the RTDs, which are ready to drink coffee liqueurs. So again, with a legacy player of Kahlua, they don't have a lot of innovation and their mass market and lacks authenticity. Basically, they haven't had to be innovative in any other time, any of their marketing. They are owned by Diageo, which is the largest liquor company in the world. And they put a lot of marketing into other brands versus Kahlua. That's versus the craft coffee revolution that we've all seen over the last 10 years. That was really started by Starbucks a long time ago, becoming the third place. So we're trying to connect and create a product that will connect on that level, have people have it become part of their identity and their brand. Our coffee liqueur is something that we want people to be proud of and to look at as a lifestyle position brand. Our target market is mainly not people in this room, but Gen Z and young millennials females who have adopted espresso martini as their go-to drink. The espresso martini is the third most requested drink right now in the nation, and that is a growing segment with a lot of adoption in this subset. Our business model is a very traditional distillery business model. We're looking primarily for the lifestyle connection and to connect to our consumers. We are focused on the Houston market first. There's a lot of opportunity in that market. There is 7 million people in the metro area of Houston. It is the fourth largest, soon to become the third largest, next to New York, LA, and Chicago. And we're going to focus on that with our tasting room, and then build upon that success, going and focusing on the rest of the Texas metropolitan areas. Our strategic channels is mainly our tasting room. We're looking to grow those sales as much as possible and drive those high margin events there. And then the distribution channel, we have Texas has a 4-tier or 3-tier law where I only have one customer, and that's our distributor. They then sell to liquor stores, who then sell to bars and restaurants. The on-premise are bars, restaurants, and other places like that. We do have high adoption rate in those segments. Haywire is actually one of our best customers. We've been invited to become to one of their supplier conferences coming up in Dallas next month. They have about 20 to 30 different locations, including a brand called Whiskey Cape. And then off premise is our liquor store. Specs is the local liquor store in Texas. They have about 250 locations. We're in about 70 of those right now. And so on premise is where the brand will grow. We go enter in the espresso martini, people try it, then they go to the liquor store to buy it. Our new product that we're looking to launch later this year and maybe even early next year, we've actually reformulated our coffee liqueur into an espresso martini ready to serve. Unlike the California market, the Texas market does not allow liquor in grocery stores. Therefore, we've made a formula that is wine-based. And the loophole is it's a fortified wine. It's about 99% liquor and 1% wine. That allows us to then go into the grocery store channel and compete with other products that are wine-based. In Texas, you see a lot of wine-based margaritas, wine-based Bellinis, and other products like that. But that opens up all of the H-E-B's, Kroger's, Target's, all of the chain grocery stores. And H-E-B is a huge grocery store in Texas, if you don't know, and they're very proud to be a Texas brand. We actually started during the pandemic and sold 100,000 bottles of hand sanitizer to them. And that was a conversation I had over 10 minutes that said, hey, if you keep buying from us, we can keep 30 more Texans employed. And that was in June of 2020. And they ordered 2 truckloads from us. The espresso martini opens up the $9.4 billion RTD or ready to serve market. We aren't looking at a canned coffee liqueur. It's not a single serving, it's a multi-serve. And that best suits us because we're not really set up for canning at the time. And it also degrades the quality of the product. So our traction that we do have 3.2 million in total revenue since inception. We did open up during the pandemic, and we've actually pivoted from being more of a whiskey focused company to the coffee liqueur because 81.3%. So 4 out of 5 plus of our offsite sales, our distribution sales have all been in the coffee liqueur. We are in 250, or actually need to update that, over 300 different accounts, both bars, restaurants, and liquor stores. And we're raising $2 million to basically expand our brand acceptance and brand awareness in the Houston market. So it's going to be driven by a lot of marketing. That's a lot of boots on the ground, as well as marketing campaigns, and then to launch the ready to serve wine-based espresso martini. After that, we'll focus on the Dallas and San Antonio, Austin area. The team is me and my college roommate, Zach Hiller. I blame him for this entire journey. I focus more on the broad strategy while he's focused on the beverage, and he's a patent and trademark attorney as well. So a lot of the regulations he handles. And then we also have our lead investor, Robert Kasperzak. He provides, we do a weekly call with him about finance and the growth of the company. And one of his advisors is also an advisor to us, Kevin Spivak, who has history with Seagram and Patron as a joint venture and global distribution. Our end game is going to be a M&A activity from one of the larger companies. Diageo is not in the field because they do own Kahlua. If they do come try to buy us, it's going to probably be to put us out of business. But we are looking at a five-year play, and that's going to put us in a 5 to 8 revenue multiple. We are offering a convertible debt with 2 million to 3 million as the size. Our existing angel investor, Robert Kasperzak, has pledged an additional $1 million as well. And we've found another 100,000 from a new investor. And that's it.
Thank you.
And last up is Ryan at Buddi. How many of you have heard of the streaming app called Crunchyroll? You have, okay. Many people haven't. Crunchyroll is all anime. So their movies and their shows on the streaming app are all anime. Now, they sold to Sony for somewhere north of $1.2 billion in 2020. So my name is Ryan, and I'm with a streaming app called Buddi. Now, all of our movies and TV shows and health featurettes have pets in them. They're for people, but they're focused on pets. We fetch shows and movies for pet people. So it's going to be, and actually is, built for Gen Z and millennial pet parents. We are available in 90% of homes as of right now. And we cost $7.99 a month. And we are profitable with 75,000 subscribers. What problem are we solving? People are watching all of this content, but it is scattered. They're watching it on YouTube and they're watching it on Instagram. And if they're younger, they're saying, hey, I used to watch that dog guy, Cesar Millan, with my parents, and now I've just got a kid. Where can we find that? And maybe they're going into the Discovery app, and maybe they're looking for it on Netflix, but it's all scattered. So we are bringing it to one place for $7.99 a month. What problem am I solving for investors? We are taking 2 growing markets. So everybody in the room probably knows that the pet market, right, is growing, and US people spend a lot of money on pets. But what some people will know, but some people don't know in the room, is that the niche streaming market is growing. The big guys have kind of grown. They kind of go up and down a little bit now at the margins, but niche streaming is continuing to grow. So who is the team that is bringing this to you? Well, we've got Leila Kasha. She's CEO. She's absolutely wonderful, and she's my wife. No, but she really is great. She was CMO for Grocery Outlet, and she was actually leader of the team that took Grocery Outlet to the $2 billion IPO with NASDAQ. We've got Nathan Fletcher. He's our executive vice president in charge of programming. And he has been in the cable business for 30 years. In the last 3 or 4 years, he's gotten into the streaming side of things. He actually cut his teeth editing programs for cable. His family developed Rye TV, which was acquired by Great American for $150 million. I've grown 2 media companies in the last 10 years. I've sold them, I've exited them. But what I can do is run great media companies with a small amount of people, which is what we're doing at Buddi. So where are we? The great thing is we're going to be asking for seed. We are asking for seed investment. I'll talk about that in a second, but we're ready to go. We are all ready to go. We've spent $1 million of our own money getting ready to go. So as soon as we get that seed money, we can launch. We don't have to wait another 3 months. We don't have to do another test. We're ready to go. So we're available now. We're watchbuddy.com. Even though we're pre-revenue, right? You can come on and subscribe to us right now. We've got 200 hours of programming. We've done a lot of research, and it took us a while to get on 90% of the TVs. We are now on 90% of TVs. We're of course on your phone, on your tablet, on your Apple TV, but it took us a while to get on Samsung TV, which we are now on. So if you buy a new Samsung and you plug it in and you connect it to your Wi-Fi, we will pop up as an app you can watch. What are we looking for? We are looking for seed money. We are looking for $500,000 in seed money. What is that going to do? So we have contracted with Media Plus, which is the media agency that took BritBox, another niche streamer, right? They only show British television. It took them from 0 to 500,000 subscribers in 2 years. We have contracted with them. We are all ready to do a test market in the DFW area. So roughly 2/3 of this will be spent on that plan and digital assets for it and all that kind of good stuff. And then we are going to spend 1/3 on new programming. So we've got 200 hours, but if anybody knows streaming, it's a continual programming wheel. You have to keep serving up new stuff to people to get them excited and get them to keep logging in, keep that app sticky. One thing that's not on this slide, 2 things actually, our value, what we determine our valuation to be is about $5 million. So you could get potentially 10% of the company for a very low cost. And we actually have gone from $125,000 interest and committed to 100 actually committed. So that's good. That happened between the time we actually had to hand in the slides. So I hope you all join me at our speed dating, if you will. And I can tell you guys more about Buddi, but thank you for listening. Appreciate it.
Thanks. All right. So we are at the end of this section of it, and we had 2 people come in. If they could tell us a little about your name of your group and what you invest in. First, Alicia.
Thank you. My name is Alicia. I'm mostly in life sciences and energy.
I'm Aaron Giddens. Alicia's my boss.
And the name of the investment is Wealthing. So we have an investment club and we have a fund.
Okay, we can change this for
Right.
20, 30.
So we're going to take a 5-minute break, and then we're going to move into the speed match room. There are 5 tables in there. And so if the order in which you pitched, you would go, Ryan, you'd be the first one there, then second, third, and fourth. And then I will be in then we have each investor at each of those different tables. And then we were going to have Jerry sit at one table. We would have Henning sit at another table. Would you like to join and sit at a table?
If you need me to, I'll happen to do it.
Love to have you in there as well. And then we have Keith in there as well. So we have the 4 tables covered, and I'll be on the 5th table myself with the other companies that we have here. So you'll have 10 minutes to go through your slides, and if you want to bring your laptop out, you can to show things. And then at 9 minutes, we'll